All right, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Tuesday, February 18th, 2020. And I usually don't do this, but what I'm going to do is mostly, not exclusively, but mostly a recap of the things I went over today. A couple reasons. Number one, those are things worth watching. I think there's trading opportunities in some of those asset classes, stocks, commodities, precious metals, and I went over some individual stocks and ETFs today. So number one, let's stay semi-focused since it's kind of a broad-based, in a pretty diversified number of trade ideas, different sectors, unrelated assets. So let's keep focused there, not go all over the place. Plus, I also left out a couple today, and you know what? Let's do this. Let me just start with the ones I left out. That way, I don't leave them out again. These are, this is a couple other trade ideas that I've highlighted recently, including last week, that I did not update in today's video. The first one being TLGT, that's a drug manufacturer, specialty and generic. That's the subsector in the industry they're in. Pass this one along as a very aggressive trade about, what was it, a week or two ago? Okay, this was the first chart. This was February 7th. So yeah, a little bit more than that. And there it was. You can see the setup again. It was an unofficial trade. Why? Because this is number one. It's a penny stock. That makes it very aggressive. Stocks that are priced under $1, even those that are under $5, but especially under the $1 mark, should be considered very speculative. This is what I call if you either don't trade it because you're not an aggressive trader, you're not a speculator, or at least a risk taker. And if you do, you take it, use your Vegas money. Don't put your lunch money in this one or everything in there too high of a position. So, put in what you can afford to lose. If the company, the way I treat penny stocks is I go into the day, any position that I take home, or even during the day, I look at it and say, what will happen if they just announce a Chapter 11 bankruptcy filing? We had just two companies this week in the last 2 days. I think I saw Pier 1 yesterday or over the weekend file for Chapter 11 bankruptcy protection, and the Boy Scouts too, of all things. I think it had to do with the sex scandal and things going on there. So what I'm getting at is companies file for bankruptcy, and the ones that do, you usually don't see a $20 stock with a strong chart suddenly out of the blue. It's usually the market price is in. Now, I don't know if this company at all, that doesn't mean this one is not an ongoing viable concern. There's a reason it's probably priced under $1. I don't want to speak too much more to that because I've already talked on this stock. I just want to say, with risk goes return. They go hand in hand, but then the upside potential is great. So I highlighted this one as a long, it had that 48 cent resistance level, first target. You can see the arrow breaks, 57, 68, 82, and the potential for a double on this one, 100% plus return. If it goes up to that 104 target, that'd be it was and still is the final target. So let's do an update on this one real quick. That is right here. Okay, I won't go over each and every chart because I've already done updates on this. It went on to break out above the 48 cent level, rallied about 20 something percent. From there, hit that first target about 56, had a little intraday momentum fueled overshoot, but each and every day, look at that, boom, 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 not a single close. It respected that level. Like I said, again, these are called momentum fueled overshoots. When you have a strong upward trend, you overshoot resistance, come back in, just a term I made up. But it tends to happen quite often. You can almost expect it, trade around it. So the takeaway is you don't, on that day, you don't say, okay, it broke 56, now it's going to 68. You kind of wait and see how it closes, especially on the daily chart here. So what it's been doing since is consolidating. What I wanted to point out, it's consolidating in what takes a form, as you can probably see it here, that's called a bullish pennant. A bullish pennant is the close cousin of a bull flag pattern. It's just a different shape to the pennant than a flag. Bull flag has a downward sloping angle like that, whereas the pennant just takes a triangle pennant shape. And just like a bull flag, you have three components. You have an impulsive move up called the flagpole, followed by a period of consolidation, usually on diminishing. What you want to see, increased volume. You want to see big volume on the move up. That's what you might not be able to make it out on the video, but it's here on my volume bars down below. I have them tuned down a little bit, real light shaded, so it doesn't make the chart real busy. But you can see there was, or I can tell you there was a noticeable drop off. You can verify that yourself. And so now the third component then would be you need a buy signal. What I really like about this flag, it's not a random flag in the middle of nowhere or pennant in the middle of nowhere. It happened to form, like I said, exactly with that 1, 2, 3, 4, 5, 6 now candlesticks respecting that 56 cent resistance level. So if you get a breakout, which is the third component of a bull flag or a pennant pattern, you want to see in a breakout, ideally you want it impulsive. And the way these things usually play out is the move once you break out after the period of consolidation is typically equally as impulsive as the move leading up to the formation of the flag. And the measured target, you take your charting platform, you know, an old school, old way, or some people might do it, try to calculate the measured target based on price levels. I just take a trend line and then add that trend line to the bottom of the pennant before it breaks out. That gives your measured target. Look at that, right up to that 82 cent target. So this would indicate if that pattern plays out, doesn't guarantee it will, that we may go on through that 68 target and head all the way up there to 82. So something to watch for. Again, speculative trade, like I said, risk return go hand in hand. So you don't put as much into this as you do in, say, Apple. But on the flip side, your return potential is a lot higher. This thing could hit that 104 target, and it could hit it in a matter of days or weeks. I've seen stocks like that do that. And if you're going to have a stock hit to 100% return, it's usually going to be these little penny stocks. So then how do you trade it? Small position will allow you to use a wider stop. But either way, I just want to point that out. Now, if the flag doesn't break out, you don't have a buy signal. So if you're not in it, or you were in it and you're waiting to add, the most objective entry is there on the breakout. So watch for that tomorrow. And again, where you take profits is up to you. I just wanted to update that one. Looking good so far. And there's another one I believe I forgot. And this one is an official trade. This is PBYI, Puma Biotech. Still, this one, the story on this one, if you're not familiar with it, broke out here. We've been in this one a little longer than I expected it, but the trade's still intact. Breakout right there, back test. That's a downtrend line right there, primary downtrend line. I'm zooming in. So breakout, back test, and then it started going sideways. We hit our first target here recently, and it was a very impulsive 2-day move, and then it set up into what I had mentioned last week, into a bull flag. That's your textbook bull flag pattern right there. The breakout, it did kind of limp through there, and it didn't move up impulsively, but it did move up impulsively today. So this could be, depending on how you draw it, this could be considered the breakout. So that would be technically a buy signal. And it also happened, as I mentioned here, right on the support level. There was our T1 as our first price target. The line, although I set the target at 1235, the actual resistance level is at 1239. It's kind of been, bouncing on or around that level. Remember, this sucker moves. This guy went up, 30-something% these 2 days here each day. So you're going to have these big price swings, and it'll move up and through support and resistance levels somewhat. So, but for the most part, you can see it respected that after the momentum fueled overshoot. That first target pulled back. Consolidated on that former resistance, which then becomes support, and then boom, breakout. And so the next bullish technical event would be a breakout above the previous reaction high. I don't have this line exactly on that level. I have it at 1470, but it's also reaction high back here as well. So that's what we're looking at. So if you see more upside tomorrow, more impulsive buying, it will probably continue on through there. And the way you can trade these patterns, if you're already in this one from before, great. If you took it today, or you want to take it tomorrow, if you see more follow through, that would be ideal. You don't want to see it going down. You definitely don't want to see it at this point fall back below these recent lows, or that will be a failed breakout of the flag pattern. And if you do take it, you just put a stop. You can use a tight stop just below the recent lows there. You could put a stop just below this support level. That's 1091. So to be safe, give it a few pennies, call it 10, 10 and change. It all depends on where you're targeting. If you're only targeting quick pop up here to that next target around, I mean, you could even target that 1470 level and still make a decent return, 11-12%. But if you're going up there to that 1955 level, you can allow a little wider stop, because that's another 48% to go. So you can then therefore allow a let's say a 14-15% stop, and you still have better than a 3-to-1 risk-reward ratio, meaning you're risking 1 unit of loss, or 15%, for 3 units of gain, or 45-48%. Okay, so now I got those two out of the way. Like I said, I should have covered those earlier. There's just a lot of stuff out there. Sometimes I'll miss a few on the updates. And QQQ, story of QQQ in the markets is, like I said today, breakdown backtest. I'm not going to spend a lot of time going forward because I'm just updating these that I did in today's earlier video. QQQ continues to consolidate. I said earlier it needs to break 233.67 with conviction, solid close, impulsive break, and you can see now it's really compressing tight between 235, so that would be bullish if it can pop above it, or down below 233.67. I mean, I have to give credit to this market. That was a pretty decent breakdown, not the best sell signal, and you can see that all it's done so far, for the most part, is consolidated in time, not in, corrected, I should say, in time via consolidation versus correcting in price. That's a strong market there. So the Qs are holding up. Again, it's all about tech. SPY, same story. SPY went down a little bit more, but for the most part has been going sideways. Trend indicators are still bullish, so this can go either way tomorrow. We'll just have to see how it goes. I gave you the levels earlier today. You can also see these support levels there. If they're broken, that could lead to more selling. So we'll see where we go there. Okay, I wanted to update crude because we still have an active trade on USO, I believe. There's that 52.46 level, and the more we test it, the more significant it becomes. There it is, 52.46, call it 50.50 if you want to round off. Lots, look at that, all day long that capped the advance, and we're right there right now as I do this video, in the after hours session here. So big level to watch, and pretty constructive price action. At least crude's holding that recent low, and again, pop above there, an impulsive break should bring us up to that 55.04 level. For you ETF traders or ETN traders, we have USO, first target's already been hit, and same story. So that's the level we're consolidating under. That's why that was listed as the first target, because I expected some resistance or reaction there, and that's what you call. There's a reaction, pullback, some consolidation really under that level, and next target there is at 11.18. I think we'd carry further than that. Let me do this for you now. Let's try to correlate it to that target on CL. I have to that target up there, it's about a little over 2%. To that target is about 5.25 to T3, and on CL, should we break that level, I have to do it this way because I will move those other lines if I try to grab right on them. That would be, yeah, that's what I figured. Okay, that's about 4.5-5%. So that roughly correlates there with that third target on USO. So I think if we do break out above this level on CL, we'll probably bypass, shoot past T2 with very little, if any, reaction on USO. Probably continue up there to T3. I might tweak that downward a little bit, a little lower. The actual resistance levels at 11.53, but remember, this is secondary. This chart, as far as significance, importance, is secondary to CL. Crude futures are traded around the world, a lot of money in them, more than this ETN, almost certainly. So, if you see crude futures hit resistance, and this one has a little bit more room to go to that target, that's where you want to book profits, because USO will probably reverse with the sellers stepping in on CL. So I'll watch both, and again, I may modify that target, but if I don't get it out ahead of you, out in advance, you can pull up charts of CL. A lot of brokers have them. If you trade Ameritrade, which used to be Scottrade, they merged. They'll give you free quotes on the futures. Investing.com, you don't even have to have an account with them. They'll give you real-time charts and quotes on futures, including crude oil. And NG, nat gas, it did go above that 1954 level, which I said would be the next objective entry, but it's not very impulsive. Somebody asked in a follow-up in the comment section of the earlier video, hey, when will the next, when do you think the next UGAS trade will be? I tend to be a little extra selective on natural gas on my entries on that one, because that can be a tough sucker. I love trading natural gas. You just have to be selective on it. There's a gap. What I just did is added resistance at a gap. So I want to see a little more upside. Or my convictions aren't very high on this one right now. And yeah, I had a position that I believe was taken out earlier today. I sold it at an standing order that would have been filled already at right around that 1954 level. And I'm not back in it right now. I think it'll probably pull back in, but as I said earlier, nat gas, if it wants to run, it can keep running. Just not the most objective time. I like to buy breakouts, wedges like this, back tests, pullbacks to well-defined support resistance levels, or breakout above well-defined resistance levels like this, that 189 right there. That was a great level, and you got a back test. But at this point in time, I don't know. I think it works its way back up here to that 2.096 level. Just not sure if it's going to get there first or correct first and then get up there. So let's just say we'll see. I'll pick it up tomorrow, see if there's anything worth noting on that. And if you're in it, the trend right now off that low has been bullish so far. So you may just want to continue to ride it up and trail your stops up behind it. I wanted to point this out. Bitcoin, nice kickback rally since the video. Remember, Bitcoin broke down well-defined levels. So that was certainly a technically induced. Remember, that's all it's ever going to be, really. If I can't think any other reason, is technical developments on Bitcoin, because it's not a company. There's not really any fundamental. You're not getting a earnings miss or a beat. A new contract that the company got that doesn't exist with Bitcoin. It's a cryptocurrency, so traders really flock to the technicals, and you can see it gap down, started to go, but they bid it back up. They came in and bought up that drop so far, and it's back tested. Now that's a back test, so normally that's where you want to short. There's also a gap right there near backfill of the gap. That's probably the way it's going to go, but I don't know. I'm just stand aside right now on that one and see what happens with this back test. If it takes back the trend line, that's quite bullish. It'll show you that's a failed breakdown, aka bear trap. Shorts pile in and then they get burned, especially if the breakout's recovered. So it could go either way. Again, if I had to bet on it, I don't want to bet on it right now. I just want to watch it. I would bet on a reversal there, because it's just a perfect textbook back test. And I see another leg down. And if so, then I think we come down here, that next target there at 92.64. And that could put some pressure on those other Bitcoin, what I call proxy trades, like Riot, Overstock, and MGI. Okay, and to follow up on gold, I covered gold, silver, and platinum earlier, and I covered them last week as well, citing some levels to watch for breakouts, and they did break out, and they both, the precious metals had a nice day. Gold was up 1.28%. Now, as far as if you're wanting price targets, I pointed out, potential, divergences, things like that we need to watch. But as of now, we just broke to a multi-year high right there in gold. So there's no resistance overhead. It's like the stock market. So right now, I really don't have price targets. I'd say just let it run. It's a breakout to new highs after a period of consolidation. Actually, the bigger period of consolidation here. Being that it's in a bull market, these divergences are worth noting, but as I often say, they can continue to extend, meaning if price keeps going up, or they can even be burned through, meaning they get taken out. You take out the previous highs and you no longer have it. So take the breakout on face value for what it is. It's an impulsive green candle today. Took out again that previous reaction high, puts it a new 52-week and multi-year high, bullish. I mentioned last week of the metals. I between gold and silver, I liked silver better. I thought there'd be more bang for your buck, so I overweighted that my position there. And silver did outperform by quite a bit. It was up 2.72. This is the ETF. And it also took out this potential downtrend line. Not a lot of reaction, so I don't give that trend line a heavy weighting, but I have couple there. We'll call that 2, 3, and now so 3 reactions validated the trend line and broke out today. But you still have these other reaction highs. And if you look at it this way, if you guys were on the site, and trading back here, I had mentioned about this time we went long silver mining stocks, and I overweighted silver. I said silver looked to me like it was poised to play a game of catch up, and it vastly outperformed. It did exactly that. I'm talking about a game of catch up to gold, because gold had gotten way ahead of itself, way ahead of silver. And there's a thing called the gold to silver ratio. You can pull that on some charting programs, and you can look at that. But I can just look at a chart and see, hey, there's been a lot of bullish action in gold. Again, back here, and silver hadn't participated. Plus, it had a constructive chart. So where I'm going with this is, look at this now. Here's where silver peaked back here in August, right? Right there. The ETF, of course, we're using about 1840 or so on that high on September 4th. And as of now, we're about almost 8% below that peak. And as I just told you, gold just broke out to new highs. So from that same peak, if you were to put them equal at that point in time, let's say that's a starting point, gold, as you can see, is way up. In fact, take away all those lines. That chart looked like a mess. There's gold up 2.79. That's not huge, but again, remember, silver was down whatever that was, 7-8%. So you're talking, an outperformance of almost 10%. That's pretty significant. So here's gold moving up, and then silver, starting to come up. So silver may have a game of catch up to play here to gold. And the safe bet is spread it around. If you like the precious metals, why pick one? Well, you don't have to, especially in this day and age now of zero commissions. You don't have to have $100,000 or more in a portfolio to be properly diversified. You can buy one share of GLD, one share of SLV for literally $17. Now, should you be trading or investing? Fine, if you're not focusing a lot of your time trying to quit your day job to do it. But I'm not condoning. I am saying that if you're buying 1 or 2 shares, you shouldn't be trading for a full time trying to trade. It's not enough money. It's like going to a poker game understacked. If you're a poker player and you play Texas Hold'em or whatever in a no limit game, your chip stack gets down below most other players on the table, you have very little chance of winning the game. Same thing in trading. So either way, I just want to point out that you can diversify and put money in silver, put money in platinum. Platinum also outperformed today, up 3%. And then the big one was palladium. Palladium, which eventually I think is going to be a monster short. You can't short it now because we don't have any sell signals, but up 6.83%. So the metals were running today, and that is indicative of a risk-off environment. Yet, like I said, QQQ, got to give it points. Turned around and recouped some pretty decent losses. This is a 1-minute chart I just flipped over to. You can see that was Friday's close. Remember, we had a 3-day weekend, so this was the pre-market session today, and there's what we did. And so we managed right here. We came back right there, closed the gap, broke even after recovering that deficit. And by the way, it wasn't a huge gap down. And this, by the way, this wasn't the gap. This is the pre-market. That's how far we were down in pre-market. We opened, we gapped down from there to here. There's open somewhere around there, about 0.5%. And we only closed up 0.04, so 0.4%. Call it a flat day. That's really what we need to do here. Don't try to extract or interpolate anything big from that move. It's a very small range. Well, again, my focus, and the only thing that really, or the most important thing right now, is for the near term, is how is this range between 235 and 230, let's lower it down there. Let's just, call it 233.40 or so. How's that range going to be resolved? Actually, I like that line back where I had it. Next one up. Let's just talk one other thing that I didn't cover in today's video, and then we'll wrap it up. Keep this video somewhat short. ZB, these are the 30-year Treasury bond futures, or what we call the long bond. That's the longest maturity, currently issued on Treasury bonds at 30-year maturities. You have the uptrend line right here, a minor uptrend line. and we're in an uptrend. We're not far off of multi-month, multi-year highs on treasuries, which says something. So what it's saying is the market is also right off all-time highs, but yet treasuries have been rallying, gold's been rallying. So what I'm getting at here, this is, if I had to rank them, this is number one for what we call the risk-off assets. When institutions, especially smart money, when they're worried about the stock market, either there is a correction going on or they think one's coming and they want to move out, move some of the money out of stocks. And this is where they go usually to hide. Stocks tend to, or treasury bonds tend to go up in price when stocks fall. They have an inverse correlation. And sometimes you can use this as a tell. If you see treasury bonds gradually moving up while the stock market's moving up, saying, hey, something might not be right under the hood. So look, we're not yet above that previous high. We had nice trend line here that broke, but you can see we've been kind of inching up. If we take that out and we remain above this trend line, that's going to obviously still be bullish for treasury bonds. And unless we break down soon, that could be somewhat of we'll call it a yellow flag, not a red flag, but a yellow caution flag for the market right now. The fact that these are holding up near these multi-month highs right now, treasury bonds, and we're still above trend in a current uptrend. We just took out this previous high right here. See, we have these little trend lines to watch. And when they break, you have these little pullbacks, but so far, this is probably the biggest level. So if you're watching you want a little bit longer term, intermediate term view on treasuries levels to watch, I'd say it's in this range here from about 159, 295 to about 160, 281. Pretty decent support zone that if treasuries hold above, that should be that is bullish as long as they hold above there. Bearish if it breaks that. And then you have, that's the long bond. I like to watch both the long bond and the 10-year. This is ZN, the 10-year treasury, and I'll get to the ETFs on these in a second for you guys that don't trade treasuries or futures. All right, so I'll start here. You had a nice clean up trend line. There was your breakdown. And then from there, we set up this bullish falling wedge pattern. We also fell to that 127, 289 support. So that's a big level to watch. And we broke out above this bullish falling wedge, and we've been moving up a very well-defined uptrend line. So if you're a ZN trader, trade bond futures, you can keep buying and stay long as we're above this trend line. The stop's somewhat below it, or if you want to short it, you look for a break. But I'd say also if you're going to short the trend line break, you probably want to wait to be safe. Right about here, I can see I definitely see some price support there around that 130.090 level there. So that would open the door for a move down, possibly there, maybe even below. Otherwise, we're in an uptrend for now. We're not far off the highs. And again, a little bit of a yellow flag here. Why are treasuries rallying recently along with the stock market? Which who's right and who's wrong? So there's something to note. Okay, and now to take a look at treasuries through the the prism of at least a view of the ETFs. There's TLT. This is a 60-minute chart. That's the long bond ETF, holds 20 to 30-year treasury bonds. And you can see we are pushing up against that previous high right there. And again, similar. Obviously, it's going to be a very similar posture to the futures I just showed you. We can draw a trend line there to watch. So, bullish as long as we stay above this trend line. And we want to break above that previous high, that'd be bullish. You can also see it here on the daily chart. That 145.97, that's a level I've had here for a while. We had a major reaction high back here, another reaction high recently. We're at that level again. A break above there is bullish. Whereas, it's the same trend line I just gave you on the 60-minute chart. That wouldn't be get out of Dodge kind of bearish. It could be the beginning of a much deeper correction, but there's some minor trend line to watch that could bring us back down here, at least to that 141.70 level broken. But again, you look at the bigger picture. Treasury's in a bull market, and again, it's a little unusual that they're not far off multi-year highs with the stock market, right around all-time highs, both being in an uptrend right now. So that's something to note right there. And we had pointed out here, big symmetrical triangle pattern, just like gold that we broke out of recently, and that was bullish in itself. And you had almost the same pattern there on gold that broke out a little before that. And then the other one is IEF. This is the 10-year Treasury bond ETF, and same story. You can see here's your previous reaction highs. There's that minor trend line to watch right now. There was a larger trend line that was broken. Pretty good support around 110.35. But again, the point is it's in an uptrend. Treasury bonds are rallying, gold's rallying, and the stock market's rallying, or not so much today, but I'm talking lately. And so again, one or the other will probably give sooner than later. That means either treasuries are going to go down if the stock market continues to rally, or we finally get that long overdue correction in the stock market. And that's the way I'm leaning now for based on the technical posture and the development side, and noted recently on QQQ. Again, a little bit more. QQQ needs a nudge. It just needs somebody to bump it, give it a bump, and push it down and knock it down below this, this recent trading range, get it to that level there, and then take out 230, and that should get us down there. Otherwise, that could go the other way, and we'll wait and see tomorrow what happens. I think that's everything. Let me look down at my notepad. Yep, that's about it. All right, we'll wrap it up here and pick it up tomorrow. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.